just shy of the forecasted estimate of around 1,217 billion rand. Now that, you'll remember, was announced by the minister in the 2018 budget speech. The keynote speaker at the preliminary revenue collection announcement was the Minister of Finance, Nhlanhla Nene, who partly attributed this achievement to the new optimism in the country's body politic and economic environment, including recent ratings improvement. Well, joining us in studio now, we've got Mark Kingon. He is the Acting Commissioner at SARS. He's also accompanied by Dr Randall Carolissen, who is an executive at the Tax and Exice Institute. Good to have you, gentlemen. Thanks very much for coming in.
Thank you.
Good to be with you. Yeah.
Good. All right, so are you satisfied, Mark, as it stands right now with the collection? We've got a shortfall of, I suppose it's 700 million, less than the revised target?
Obviously, I would have loved that we had made the target, and our staff was striving to meet that target and make it and go beyond it. That's our intention always. So yes, I'm happy that we've collected what we could collect. I'm sad we didn't make the target. So it's a bit of mixed feelings.
Yeah, yeah. Where did you fall short? Where did you find the most shortfall?
I think the key areas, if we look at domestic VAT, was below the average, and import VAT as well. If you have a look at some of the figures, those are some of the areas. Dividends tax was significantly lower year on year, but that had to do with more what dividends tax was collected last year compared to this year, because of the rate increase. People were foreshadowing the dividends tax at that point in time by paying out dividends earlier than the budget speech last year. So we didn't see the same happening this year. So those are the key areas. Obviously, we've seen other taxes like company income tax being quite stable, about 6.4% increase year on year. Pay as you earn continues to perform well. That's in the personal income tax space and is a significant contributor to the fisc.
Yeah. Randall, let me bring you into the conversation. Tax and Exice Institute, what is your role in the entire process?
In essence, the head of research at SARS. So we look at we're looking at macroeconomic models. We do forecasting. We see how much tax is collected, and then I'm also responsible for overall revenue coordination. So we need to look at all the factors that can improve that we can improve on. Closing the tax gap, looking at compliance trends, and all a host of those things. So that's meant to inform the organisation and Treasury as to which way taxes are going.
Yeah. So if we have to elaborate a little bit more on the taxes that came short, what Mark was talking about, let's get it from your perspective.
So we had some very interesting patterns that developed last year. So up till December, we were growing on average at about 6% revenue year on year. And then from December to February, we saw an acceleration. We grew over 9 to 15% in taxes. And that had to do with the improvement in business confidence, and that showed itself in corporate income taxes, provisional payments. Companies were more optimistic. We saw an improvement in an expansion in the manufacturing sector. The PMI grew into expansionary territory, and we got better results from that. The rand improvement resulted in companies being more inclined to import, or they could then strengthen their previously neglected capitalization. And we also saw more taxes from that. So that lifted our overall growth rate to about 7%. So it was very optimistic. We could see the real effects of the economy starting to play itself through in the taxes. Unfortunately, in March, we lost some momentum. And then in March, we dropped down to 6.3%, giving us the result as we have. We, like Marcus said, we are a little bit sad that we didn't fully make the target, but the shortfall is very low, 0.06%. And that speaks volumes to the quality of people that we have. Yeah. People were literally working over the Easter weekend to bring in the last bit of money.
Well, let's get into issues within SARS now, because let's not kid. It's going to be hard to bring the reputation of SARS back to its former glory.
We've been going through a tough period. We can't deny that. But what is so encouraging as we've been going through this tough period and the transitions that have been happening in the last little while, such encouraging feedback from the staff who are still so supportive of our higher purpose of trying to do the right thing, collect the money as quickly as possible and properly, and trying to render professional service. So it's been tough, yes, but there's a huge optimism that we will do what's right, and going forward we'll make sure we can collect the revenue needed for government. You know, next year's target is a huge ask. I mean, we're talking of 1345 billion, 1.345 trillion. It's a significant ask. It's 10.5% up year on year. So we have to be optimistic. We have to be focused. We have to seek the opportunities and identify the gaps to fill that revenue gaps that there are, and move forward.
Yeah. Let's look at key staff that were lost during this very difficult time, because I know you speak about the dedicated staff that are left, and we know that thanks to them that the work is still being done. However, there's still huge skills that were lost out of SARS due to this bad management. How are you attracting these members back?
Look, well, whether we will or not attract the people who left back, that's open for debate. I think the issue for us is we need to find a way to retain skilled staff. We need to find a better way to use the staff that we have. We need to attract good skills. So if we go into, for instance, transfer pricing, base erosion, the type of skill that we have there are in demand in the private sector, both locally and internationally, and obviously we've got a demand. So we've got this constant tension with the private sector that is pulling our staff. So we have resignations on a continual basis. We need to find a way that we can attract them, that we become an employer of choice. And for me, that is critical, that people come and work for us. They identify with us in terms of the higher purpose.
Yeah.
But more importantly, the staff that we have, are we utilizing them properly? And that's the question I'm asking myself. Are they being used optimally? Are they contributing to the fisc? We need to ask that. We need to upskill people and empower our people to be more skilled in terms of these key areas, such as structured finance, etc. So it's an ongoing effort.
Yeah, and a lot of work that still needs to be put in. Now, there's obviously the taxpayer and the deterioration in the morality of the taxpayer, which is a major issue as well. And I bring that together with the issue of public finances that have been abused. And we've seen this happening before our eyes. And most importantly, I think it's also the refund issue, that many taxpayers are still waiting for refunds. Can we try and address those? I don't know who'd like to take that.
Yeah, sure. Look, we've seen a deterioration in compliance levels overall across taxes, and of concern especially those taxes that are agency functions. So in other words, employers collect on our behalf. We see an increasing tendency of them not paying the money over or withholding it. So we have to address that. But a large part, and you're completely right, economy is one driver of tax revenue. The other part would be then the tax morality tax that informs tax compliance. And that you bring about by respect that people have for the organization, the equity, the fairness, and all of those things. And we need to really work hard on that to bring that back into alignment.
Yeah.
And included in that is rendering a professional service. You know, if you render a professional service, we believe that if we give a good service, we will see compliance follow. So paying refunds on time is one of the areas which are identified. It's critical that we do it. So if we look at the Tax Ombuds report in the latter part of last year, they identified 12 different areas that needed to be looked at. We are specifically focusing on those. We're having system development in terms of some of them, which is in process currently, which we hope in the next few months we'll start seeing results. But it is our intention, under no circumstances do we want to even have the perception that we are withholding refunds.
Yeah.
So if we start rendering that service, we believe that compliance will follow. If people see a professional, it's not just a take, but I'm trying to serve you in a professional manner, we believe we'll see compliance. And to that end, there are things that we do need to do. There's many of our failings in service, whether we look at estates take far too long in terms of the SARS context. If we look at the large business sector, which is a significant contributor to the economy, we need to serve them better, and we need to find a way to streamline our processes in that area. And we can go to many other areas like that in the organization that we intend to look at, focus on it, and find a better way of doing it, working with our taxpaying community to improve the service to them.
All right, gentlemen, we'll leave it there for this morning. Thanks very much for talking to us. Mark Kingon, the Acting Commissioner at SARS, and Randall Carolissen, who's Carolissen. Is that right? How do I say it?
Carolissen.
Carolissen, thank you.
Roll it a little bit,
Before
yeah.
I go and embarrass myself further, Carolissen, the GE of Tax and Exice Institute, thank you very, very much for joining us here on the program, unpacking yesterday's announcement of the preliminary 2017-2018